Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today I've got 3 growth stocks to buy in 2021, assuming the price is right. I've spent a lot of time researching these growth stocks. I think they look pretty solid, and all of them are coming closer to the point of profitability, which, as most of you know, is of key importance for me. Just a reminder that my stock picks and projections, they're just my opinion for your entertainment. Always do your own research on stocks before buying. And before we start, if you like stock market analysis like this and other personal finance videos, please subscribe to the 40 Finance channel. Give this video a like. Thank you to everyone for your support. All right, first stock on the board today is OptimizeRx, ticker symbol OPRX. And what OptimizeRx is doing is offering a digital way to reach doctors within the healthcare system, very specifically with the patients that they're treating. This is a quick peek at their website, enterprise platform for digital health communications and care management. It actually operates on both sides of the spectrum. It's a benefit for both patients and medical providers. But the big game here is for the pharma brands, and that's reaching healthcare providers and patients where and when it matters most. They have the largest EHR network reach, proprietary algorithms, the data you need, yada, yada, yada. This is the key though here, electronic health records, EHR, and the networks that they play in. This is where OptimizeRx sort of holds their advantage. And within these EHR networks, they have the ability to communicate with physicians and send them, let's just say, suggestions at the point of care when a pharmaceutical could be a good match or a good alternative to a current treatment. So this is deep, deep integration in the healthcare space. And it kind of replaces, the old school pharmaceutical marketing where you go to the physician's office and you buy them lunch and you do a PowerPoint demonstration. This is going very targeted into patients that have specific conditions that the RX could help. All right, looking at the stock today, price at $45.41. The 1-year chart shows you like, hey, some people, investors have been interested in this. It has run as high in February as $62. Today, you're at $45. EPS of minus 15 cents. Market cap, very small stock, under 1 billion market cap. And you see this is a low volume stock, only 55,000 shares traded. So you're in early on this one, and it could take a while to produce. And by a while, I mean you should prepare to hold a stock like this for 3 to 5 years. I'm guessing you can get some return on your investment in the first year or so based on the numbers I'm about to show you here. But just understand it is more of a long-term hold. Here you see the projections for 2021. Year ago EPS, 20 cents. This year that is expected to double. 2022, you get up to 81 cents, which doubles on 21. So let's just assume for simple math that these guys hit 50 cents in EPS. That's basically a PE of 90. And then if they go on to get 90 cents out of next year, your PE drops to 50. So we are making some good progress from an earnings standpoint. Sales, you see, again, small company, $56 million projected in 2021. That's a 28% increase from last year where they landed at 43 million. Next year, analysts have them going up to 75 million, and that'll be a 32% increase. All right, so from a price target standpoint, at least for myself, it sure would be nice to get this one near $40. You can see that we've had an affordable dip here all the way down to $42 over the past week or two as we've kind of had this mini market meltdown. And this is where you just have to pick as an investor, like, hey, which way do you think the market's going to go? Do you think the interest rates that stand at 1.6% on the 10-year today, Do you think that they go up to closer to 2% like I do? And then you might see this stock dip a little bit more, closer to 40, perhaps even under. Or do you think, on the flip side, that it's raging bull time and the things that I just said about interest rates don't matter, and you buy in at whatever number you want and it goes up? I personally would be pretty selective on where I got in. On this one, I wouldn't mind starting a position today at 45, but I'm going to be looking for opportunities to manage down from there. All right, next stock on my list is Magnite. This is another sort of advertising play, very similar to what you would find with Trade Desk, and we know how a Trade Desk is panned out. This is a much, much smaller play than Trade Desk, but the opportunity is still there with Magnite because they are sort of an independent company that's buying up other smaller independent sell-side platforms and coming together and making a little bit of noise in the connected TV space. So with independent platforms like Magnite, you get some interest from advertisers who want to get out of the Googles and the Facebooks, or at least assign some spend that is out of those networks. And this is especially true if you're big time. So one of Magnite's top clients is Disney. So you're talking about a billion-dollar engine running on advertising. Disney doesn't want to spend all of their money with Google and Facebook, right? And they have multiple touch points that they're trying to hit the consumer on. So a company like Magnite that sits outside of those walls and can still offer connected TV as well as other solutions is very attractive for Disney as a percentage of their much larger budget. So definitely a lot of opportunity here. Here's a recent article from Motley Fool that gives a good summary. Streaming TV is now ubiquitous, but the party's just getting started. Magnite's connected TV business is growing fast, and the company is doubling down on this area with a big acquisition. That acquisition was SpotX. I expect more bumps in the road, but this is a great long-term value play on the future of at-home entertainment after the recent sell-off. All right, stock price today, $46.71. You can see on the one-year chart that this did have a run-up up into about Valentine's Day to $61. It dropped to $39. Currently sits at 46. So it could be a good opportunity to start a small position and manage down. That's what I'm expecting to do myself. You can see no P ratio or EPS yet. Volume is much better on this one as compared to OptimizeRx. You're in the 1.8 million shares traded. And on the analysis tab, we can see again that profitability is right around the corner. In fact, a year ago, EPS on this one was 17 cents, and we're supposed to hit 26 cents here in 2021. Looking ahead to next year, basically a double up to 45 cents. So if we do hit this 26 cents at a forward PE, it is expensive, right? You're at 175 or so as the PE. Next year, you'd get down to 100. So you really have to believe in the growth rates here. Looking at revenue, last year, 200 million. This year, 287. Next year, 337. So that's growth of 30% and 17%. All right, taking a look at the chart for Magnite, you can see that last week's dip was really an optimal buying point. I do believe that you will see more opportunities like this throughout the year, not because Magnite's a bad company, but just because it's running hot. We saw those PEs and we saw what could happen when interest rates get bumped a little bit. It leads to a rocky road. So I would say, $37, that's a great entry point. Certainly 35 into the 30s. Price today is at 46. So that would be a spot where if you bought in today, you're probably looking to average down. All right, next stock on the board is a company called Everspin, whose ticker symbol is MRAM. And that MRAM ticker symbol stands for what the company builds, which is this magneto-resisted random access memory. This is a little bit outside of my comfort zone, I gotta tell you. but I'll show you why I'm super interested in this stock, and it's very cheap, but I'm just going to call it right now. This is either a home run or a pop out. It's just the way this is going to go, but this is a $6 stock, and I'll show you what could happen if all the moons align. And again, like the others, I'm looking for companies that are inching closer to profitability, and that's exactly the case that we have here with Everspin. All right, I'm going to share everything I know about this MRAM technology, which has all been something that I've learned over the last couple days just by reading a lot of things. So here on Google, what is MRAM used for? MRAM is a type of non-volatile RAM that stores data using magnetic charges, in contrast to SRAM and DRAM. And this is the key. This is different than SRAM and DRAM that use electrical charges. MRAM memory chips combine high speed of static RAM and high density of DRAM to offer the most dependable storage solution. And if you can read the small print over here on Wikipedia, they have this note here: developed in the mid-1980s, proponents have argued that MRAM will eventually surpass competing technologies to become a dominant or even universal memory. So that's the opportunity here. It's not going to happen overnight, guys. I'm not going to give you empty promises. But if they can start to dig into SRAM and DRAM markets on top of what they're already selling, that's where you get Everspend Technologies with a big future in front of them. Could be 5 years, could be 10 years, but we'll see real quick on the stock price. If you want to put in a speculation play, it could pay off big in the long term. All right, so here we go. Everspend Technologies, 650, up 4.86% today. Looking at the 1-year chart, you got tons of peaks and valleys in here, right? So take advantage of what is shown on this chart right here. As recently as March 1st, this stock was $5.29. Let's go back. Jan 25, $5.34. December 14th, $4.50. Use that to your advantage. You don't need to buy Everspin if you're interested and blow everything all at once at $6.50. I think you're going to see other opportunities. EPS today, negative 45 cents, so no P ratio. Volume, this one sits in the middle. This is low volume though, 85,000 shares. Let's take a look at the analysis tab. Small stock, you only have 2 analysts, so we are guessing a little bit here. Year ago EPS of minus 25 cents. This year, if these 2 analysts project correctly, they're going to land right about flat and start to eke out a profit in 2022. All right, if this 21 cents happens, my calculator says you got a PE of about 30 on today's price of $6.55. If we go down to the revenue, last year 42 million, this year 45 million, next year 53 million. Good growth trajectory for a small stock, but keep in mind you are in small timeville here. This is a much smaller stock, so the volatility is definitely there. All right, on the chart, this is one of the crazier charts that you're ever going to see over 1 year when you take in the moving averages into account. And it just goes to show you, I think you can wait for some of these valleys to come in. You might see this stock at 784 or 877 for a month or two. But eventually you're going to get your opportunity to get in here closer to 5, and that's really probably where you want to be. The 200-day moving average is at $6, so potentially anything under $6, at least in my opinion, would be a good place to start. And I would just add sequentially over the year, because you're waiting for news that a big user of DRAM or SRAM switches over to MRAM. That's what you're waiting for. So you're waiting for technological advancements, and then this one really takes off. Those may not happen. Just to be clear, those advancements may not happen. You need to do your research on MRAM. I think that the odds are better than not, at least in some cases. So I will be picking this one up when I see a price dip. All right, let's take a look at tip ranks to see what the best performing analysts think about these three stocks. Start off here with Magnite. You got 4 buys, 2 holds, but if we peek at the recent activity, which will start about here, 1 month ago, Zachary Silver, these are all top-rated analysts. You've got a hold at 66. The price has come down since then, obviously. And then you got 4 buys in that $65 to call it $75 range. All right, taking a look at OptimizeRx. Scroll down again, not a ton of coverage, but you did have 2 analysts come in 18 days ago, buy of 85, buy of 75. You know, that's 85% and 63% above today's price. That 18 days ago, I think, was before the recent dip that we had, so they may eventually lower these, but it's at least a positive sign that some of these best performing analysts kind of agree with my outlook. All right, finally, you have MRAM, Everspend Technologies, and going down here, you got one that came in 17 days ago from Needham, a buy at $10. This $8 buy was actually 3 months ago. So again, these stocks are so small, you're not going to get a ton of analysts. You're going to have to read a lot. I can tell you that I've read a lot about these companies, and it's just good to see this $10 buy signal out of a 5-star analyst from Needham. All right, guys, so those are my 3 growth stocks to buy for 2021. I am going to be keeping these very tight on my watch list. As of this viewing, I have not bought a single share of any of those 3 stocks. However, I am super interested in all 3 of them. If I was going to buy one first, it would probably be Magnite, only because they're more developed. From there, I would go into OPRX, and then finally MRAM. The catch on MRAM, though, is it might get added first, depending on where the price shifts. If you get under that $6 mark and into the $5, that's one where I'll probably just buy, you know, a couple hundred shares and just throw it off to the corner, and we'll see what happens if technology changes. But read about it. It's very interesting. I think all 3 of these stocks have a compelling case in their own way. Thanks for watching, everybody. Please give this video a like and subscribe if you enjoyed the content. We'll see you on the next video.